Hello and welcome to the stock specific class here for Thursday, June the 17th. Kind of a wild day, or the last couple of days. We had the Fed news yesterday. As I mentioned on Tuesday, it looked like the market was just kind of waiting for the Fed news before it really did anything. And since the Fed news came out, it's just been kind of whipsawing all over the place. But I go back to what I've been talking about in the last couple of updates, where I said it just doesn't feel like we're going to have a bigger correction right here. At least when you look at when you look at the chart patterns, when you look at the technical indicators, we're not in an extreme overbought condition, which is usually what kicks off a much larger sell-off. Now, I also mentioned that it was possible we had some near-term selling that could take place, which I think we did have, we have a little bit of that today, although we're coming off the lows a little bit for today. But ultimately, I think we're going to be moving higher. If we take a look at the direction alerts, like I said, we're still seeing tired market conditions right in here, with sentiment above momentum and momentum above breadth. There's sentiment which is above momentum which is above breadth. So that's kind of just showing a tired market. Again, tired market is often precedes selling, but usually you'll see that tired market, and then you'll see kind of the extremes where we get into that overbought condition. So I think we're going to get close. I think the market's going to have another thrust upward, and then then we're going to reach this overbought condition, and then we're going to have to be really concerned about a bigger correction or reversal. But you see momentum's right in the middle, well off the extreme range, and not only the extreme range, but we'd probably get closer to the right side of the extreme range, although we don't have to be all the way to the right side, but you'd like to see it get a little bit closer to that right side. Breadth, again, right in the middle. It's under the trending. Sentiment is close to extreme, but it's still not extreme. You look at the buy-sell ratios on the recent selling; they've come closer together. So that's not showing an extreme on the buy-sell ratios. Sentiment backed off a little bit here to where it's still not at the extreme. So nothing's showing anything extreme yet, and then when you shift over and look at the individual chart, you can see that we sold off a little bit, but we're getting a little bit of a hammer candlestick formation, which tends to be a little bit more of a bullish formation, although it's a little bit more bullish when you've had a lot more selling that's taken place. But we've had a little bit of a drop right here. The Dow is the one that looks the worst of the indexes. It's been dropping for several days now, but there's a little bit of a support area down in here that it might bounce off of, right into here. Nasdaq 100 is breaking out higher today, so you have a little bit of a mixed market condition here. We're reaching new highs. But here's your little pullback right here, and you're breaking out of this range again, and looks like it could take off. So I'd really expect a lot of the tech stocks to rally this week, and maybe even into next week. Russell 2000, again, it's coming off the lows of the day, but this looks like an ABC correction right here. I talked about this a little bit on Tuesday. That looked like it was kind of forming that. And I did mention it could probably dip down a little bit further still, and it did. But you have a little bit of support at the intraday low today, and it looks like it could kind of rally up from there. Excuse me. Now, I'm not ignorant to the fact that sometimes in downtrends, they look like bullish ABC patterns at first, and then they keep dropping and dropping and dropping, and then you realize you're in the downtrend. I get that, but like I said, in context of everything else we're looking at, we're not at those extreme conditions yet, and all that kind of stuff. That it just looks like we're still going to move higher. in the near term. And so what I would expect is to see the Russell break out to new all-time highs. We're just shy of, we pulled back just shy of the new all-time high. I think the Dow would be the one that has a little bit more work to break to new all-time high. The S&P and the Nasdaq 100 have already done it. The Dow has a little ways to go. But that's what I can see happening is those indexes, the Russell and the Dow, starting to rally, and if that happens too, it'll create that sentiment of being really bullish, where the crowd is just thinking, oh, this market is never going to drop. You get all these situations where you get the dip and people buy the dip, and they just get into a habit of it's always going to go back up again. You always buy the dip, it's always going to go back up. They think they're geniuses, and then it's right about the point where they're overly confident that the market crashes and they get wiped out. And that's what I would anticipate would happen before a bigger correction would take place. If you look at now, there's a couple other things I want to point out. Normally, I don't go through the whole list on a Thursday, but we've had some important things happen. The bonds have taken off here, gone to a higher high today. Remember on Tuesday, we were talking about when we were starting to turn lower right here, we said it's possible this could be a bearish ABC pattern and bonds are going to head back down again. I said that, the key areas to look for was this low right here and this high. If we broke back above that high, that would be a higher high and it would be more bullish. You have a higher low right here too. So we're definitely acting like an uptrend in bonds right now. And so we'll see if this is a trend reversal. It's possible that we're dealing with a little bit of a trend reversal in bonds. That'd be a little bit unexpected. A lot of people are still more bearish on bonds. But again, that's what the chart's doing right now. We have to pay attention to that. Gold, we're bullish on gold. We were looking at this as just a pullback within the uptrend. We thought gold would start taking off. We did say it could drop a little bit lower, but we had a big drop yesterday and then a huge drop today. And now this is not looking. Remember, when you're looking at the trend behavior, you tend to, remember how I talked about this, you tend to alternate between impulsive and corrective within your trend. So you have impulsive, and then on the pullbacks, it tends to be more choppy, more sideways. That's a corrective type behavior, which is usually followed by the next impulsive move. And so you're expecting the pullbacks to act more choppy, more sideways. When you get into a trend reversal situation, usually you'll have impulsive up, followed by impulsive down, and then the rallies will be more choppy or sideways. The corrections within the downtrend will be more choppy and sideways. Well, what we're looking at here was, here's your impulsive move up. This was looking more choppy, more sideways up to this point right here. So we were expecting, at that point, it's still acting like an uptrend. We're expecting the next move to be an impulsive up. But then you get impulsive down, and it changes the picture here. This is looking like impulsive up, and you have a little bit of a hiccup right here, but it looks like this is pretty much impulsive down. This is acting like a downtrend now. So what would confirm that? Well, you want to pay attention to any rally on gold now. If it rallies up in more of a choppy back and forth type fashion, voice isn't cooperating today, so I might have a few pauses here. But if it rallies up in a more choppy fashion here, then it would be more likely that that's just a correction within a downtrend, and the next move should be an impulsive move down. So we'll keep an eye on that. I'll definitely comment on it as I see how it behaves off of the big downward move here. But I definitely wouldn't be buying gold on that big of a drop, because this behavior is looking like an impulsive move down, and that's a very bearish type behavior. If you want to feel like you can pick a bottom, be my guest, but that's how people get wiped out. I want to try to recognize the trend behavior. Is it acting like an uptrend? If it's acting like an uptrend, that's when I want to be buying. If it's acting like a downtrend, I'd want to be shorting or staying on the sidelines. right. And then a couple other charts too. Well, oil dropped a little bit today, but that's not looking too bad. That could still be part of a correction within the uptrend there. But the dollar has made a huge spike up. Now, this isn't overly surprising because commodities and the dollar tend to move inversely or in the opposite direction. So we had the big move in gold, have a big spike up here in the dollar. But the same thing would apply, because remember what we were talking about on Tuesday was we were right in this area right here, and it looked like this was the downtrend, and this was wave A, wave B, wave C of a bearish ABC pattern. It looked like the next impulsive move down should begin pretty soon, and then we've got this impulsive move up. So we've got to recognize the fact or the possibility that we're in a trend reversal on the dollar. What we confirm that? Well, the next time the dollar kind of pulls back, as it kind of pull back in a little bit of a choppy kind of fashion, that would probably be a clue or a signal that the dollar is more likely to have another impulsive move up and be in an uptrend. Now, what happens if it came right back down? You have an impulsive move back down. Well, that is always a sign to me of indecision, and that's usually a warning sign to me to stay away. I don't know what's going on at that point. It's not acting like an uptrend or a downtrend. It's acting erratic. And one of the things, again, the reason why it's so important that we learn how to recognize these trend behaviors, is because a big decision sometimes is to know when to stay out, know when to not trade, know when to know when the probabilities just aren't in your favor. And if the market is acting erratic, where it's not well, it's just like anything with human nature. There's a just take people. I mean, if someone is acting like a normal person would act, that you don't have any sort of concern. But if you see kind of a lunatic out on the street screaming at the top of his lungs and doing just erratic behavior that normal people wouldn't do, well, are you going to assume that person is going to be making rational decisions, or are you going to assume that you have no idea what to predict what that person's going to do, right? That person could do something really, really bad, or he could end up turning around and doing something really kind, but you have no idea because of the erratic behavior that he's exhibiting. Well, that's kind of what the market can do sometimes, and if it were to come right back down, at least at that point, I don't know what it's doing. I would probably just kind of stay out and not, at least as it relates to anything related to the dollar. Or if you go back to gold, if gold does the same thing, just kind of stay out, wait until it starts exhibiting that more rational behavior. So in other words, if I'm moving along like this, I'm going impulsive, corrective, that's normal. Even impulsive up, impulsive down, and then corrective, that's normal. That's kind of the normal trend behavior. But if you get impulsive up, corrective, impulsive up, corrective, impulsive up, impulsive down, impulsive up, I don't know what's going on. Well, just wait, because then maybe you have corrective and then impulsive, corrective. Maybe now it starts acting like an uptrend again, and now I can have a little more confidence that I'm reading what's going on, and my probabilities of that stock going higher are a lot greater. So we'll keep an eye on the dollar and on gold there, see if anything changes next week. The VIX is down a little bit today, so there's not a lot of concern in the selling that was taking place. So that's another reason why I'm not expecting a much bigger collapse here. So again, that's normally I don't go through all that stuff I do that on the market update, but I want to kind of go through some of those things because it was significant what happened the last couple of days, and then we also want to make sure we understand the trade environment before we start looking at individual stocks to trade. And right now, again, I'd be pretty confident about looking for trades and stocks that could go up in this environment. I think the markets should continue to move higher based on what I've analyzed, and so that kind of sets the stage as we go into our individual stocks here. So let's go into our sectors. Some of these, I know I repeat some of them. I try to make sure I have new ones as well. But I do like if some of them are still showing up in the categories, I'll go over them again, especially if they haven't triggered yet. Although under computer and technology, some of these already have buy signals, and I've talked about them. But I can review if there's some new people here today. I can review some of these real quick. Blink is one I've liked, 99 strength rank. And let's switch this over to signals here. It has a buy signal. It has a buy signal for a while, but I just like it looks like it's moving up to the right side of this bowl. You can even call this a little bit of an inverse head and shoulders pattern. You got a little bit of so you have this, here's your impulsive move up. This is more corrective, more choppy, more sideways. Just recently broke above this high right here, this previous high right here. It just looks like it wants to go higher. Now, sometimes when they're moving sideways like this, you can get a sharp dip where it comes down a little bit, and then it goes higher. You heard me talk about whenever you see a stock moving sideways, you want to pay attention to the direction the stock was moving in before it went sideways. That's where it's more likely to go after it's done moving sideways. And that concept, and remember, these things I'm teaching are concepts. There can be little variations to them. But what you'll learn a lot of times when you're seeing stocks that move sideways like that, sometimes what will happen is the reason why it's moving sideways is there's indecision, right? And the buyers aren't real confident things are going to go higher yet, so they're not buying aggressively. The sellers aren't confident it's going to drop, so they're not shorting aggressively, and that's what's causing it to move sideways. And sometimes what will happen, sometimes the buyers will just get confident and it'll break out. It'll just go higher off of that sideways move. But sometimes what will happen is you'll get a sharp sell-off that kind of breaks below that sideways range. And that was what the buyers were waiting for, was a little bit better price. They were waiting to be aggressive because they wanted to feel like they're getting a good price. So it sells off right here, and now the buyers become aggressive, and it starts to push it higher at that point. And what it also does is it shakes out that little sell-off right there, shakes out the weak buyers, the buyers that really weren't confident anyway. Now they're panicking because it's dropping lower, and they're the first ones to sell. And it kind of shakes those buyers out, and then what you get is you get the aggressive buyers that are coming in, and that's what pushes it higher. So going back to this chart, it wouldn't be out of the ordinary here to get a little bit of a sharp move down. It doesn't have to, but it wouldn't be. I wouldn't be overly concerned if it had a little bit of a sharp move down and then took off out of that. Now, you wouldn't want any sort of sharp move down to go below this low, because if this is an inverse head and shoulders pattern, the two shoulders should often line up in the same spot. They don't have to, but this thing could come all the way down to here and still be an inverse head and shoulders pattern. But if it drops below that, especially coming from up here and going all the way down below that, that would concern me a little bit and would probably cause me to stop out of any trade I was in. But I like that pattern. I like the company, the story, and these companies have been pretty popular lately and done pretty well. Another one, it's under the buys, gone over this before too, CBAT, right here, CBAC Energy Technology, kind of the same thing. And this is kind of moving sideways right through here. Has had a buy signal for a little while, but it still looks like it's in a good spot as a trade if you want to consider it. We go into the hold section. One I went over on Tuesday was the Canaan. This is a Bitcoin. I think they provide the tools for Bitcoin mining. But this now again, it's real subtle here, where it's come down. It looks like it's kind of turning the corner. This could really be in the early stages. You had this little move down, this sharp move up, and then it's been kind of moving sideways right through here. But I think at this one, by the time this one gets to a buy signal, I think it would confirm that possible trend reversal. and we're still a little ways away from getting that buy signal. So I think it'd be probably important to wait for that buy signal on this one to get that extra confirmation that it's starting to move back up. No need to get in too early. You've already had this big drop. The potential, if it starts to rally again, could be to get back up to previous highs. And, you know, in this case, you're looking at going from possibly $10 up to 40. Now, it wouldn't do that right away and may not even get up there. I mean, it doesn't have to get up there, but there's no reason to get impatient here because there is still downside. And kind of wait for that buy signal to kick in. But this is one that I kind of like here. And then another one under the holds, computer and technology, is this MOXC. It's a 98 strength rank. Now, this one would be important to wait for the buy signal because the reason why I like this one is you had this big move up, and then this looks like wave A, wave B, and it's forming wave C before going higher again. But wave C, usually wave C will end up going below the end of wave A. Usually you'll see that that's wave A, wave B, wave C will end up kind of lower. And when I see wave C's that are right at the low of wave A, usually in most cases they're still a little bit lower. So you say, why am I bringing this one up now? Well, to kind of keep an eye on it because it probably will drop a little bit further. Probably should drop a little bit further. But then if it goes back to that, and it wouldn't, it may even go to sell. So it could go to a sell and then back to hold again. But if you wait for it to go back to a buy signal, then it's probably ready to go. It's probably ready to take off again. And so that's one that you might have to wait a little bit longer on, but you could kind of put it in a watch list. And again, if you put it in the watch list, and you could put a signal on it to tell you when it goes from hold to buy, because even if that thing goes to sell, creating if it is creating that ABC pattern, it would have to go back to hold and then back to buy. So if you put a little alert on it to tell you when it goes from hold to buy, it'll send you an email, and then you don't have to pay attention. You don't have to watch it every day because it's probably going to be a little while before it gets into a buy situation. And if you don't know how to do that, I went over that last week, how to set up your watch list and how to set up alerts. So you might want to go back and review. I can't remember if it was Tuesdays or Thursdays update that I went over. I think it was both. I went over a little bit. It was a Thursday update that I went over all of that last Thursday. So if you go back and review that, it'll teach you how to set up those alerts. All right, under retail, the retail sector, this is one I've pointed out a few times, but I still really like it. It's had a good move today. Is Jumia, JMIA, 95 strength rank. I like the pattern, and it's had a nice move up today, nice strong move up today. This looks like a little bit of an inverse head and shoulders pattern. It hasn't broken out yet above that neckline, but again, with today's move, it could be starting towards that. I think by the time it gets back up to that neckline, it'll go back to that buy signal. We're not too far away, I don't think. Yeah, we're pretty close to getting that buy signal. This one has a lot of upside potential if it is indeed turning the corner and moving back up again. And under industrial products, I think I've gone over these before. Well, at least Plug, I've gone over Plug Power. I like Plug Power. 95 strength rank right now. Same thing. Not a strong move up today, but it looks like it's kind of turning the corner here. It did break above its neckline right there. Little neckline. Well, actually, you draw the neckline kind of like this. If it was an inverse head and shoulders pattern, but the bottom line is it looks like it's reversing. And if this thing holds right here and goes back to a buy signal, that'd also give you a higher low. So you'd have higher high right here, higher low. I'd wait for it to go back to a buy signal though to give you that extra confirmation. So you could put that in your watch list to alert you. It's not too far away. Like I said, this is considered a small cap stock. So if those small caps, remember looking at the Russell 2000 chart, it looked like we should end up breaking out again on the Russell. These stocks should perform pretty well. If that does happen, they should rally pretty well off of that. I also like under industrial products, I like this APWC right here, Asian Pacific Wire and Cable, 92 strength rank. So it's we're getting down a little bit in the lower 90s there, but there. If you're wondering why we haven't done a lot of 98 strength rank trades or stocks, there haven't been a lot of them in the 98 strength rank area. Now that's ideal. That's kind of the target. We want to see stocks in the 98 strength rank going from hold to buy, and we want to like the chart pattern as well. But that's, again, if you don't have that ideal situation, there are stocks that are 98 strength rank, but a lot of them I don't like the chart pattern, so that's why I'm not pointing them out. I want to have the nice chart pattern as well. And what I mean by that is I'm reading the price action, those candlestick formations. I'm reading the chart patterns, head and shoulders pattern, inverse head and shoulders pattern, ABC patterns, all these things I'm kind of teaching you here. Trend analysis, is it looking like it's forming higher highs, higher lows? I want to like all that stuff, and I'm willing to dip down a little bit in the strength rank. If I don't see a 98 strength rank I don't mind moving down as long as the chart pattern still looks good. But I usually don't like to go below 90. Now, like I mentioned before, sometimes the sectors you're in. I remember when construction was near the top of the sector list, there weren't a lot of stocks in there that were over a 90 strength rank. A lot of them were down in the 80s, but some of them had really nice chart patterns. So relatively speaking, that sector didn't have high strength rank stocks, and so, but the sector was doing well. The sector was forefront. It was one of the leading sectors, and so sometimes you can and this will come through just experience. You'll start to recognize certain sectors don't always give you that high strength rank, but when they're up in the list, when the sector up in the sector list, and what I'm talking about is in being up in the sector list is right here. When you click on sectors, what it's doing here is it's ranking the top sectors. Computer and technology was down here a little while back, but it's been rallying lately, and so it's been moving up the list, and now it's the number one sector right now. Construction was up near the top of the list. Now it's down here. It's kind of moved down the list. So you'll notice that some of these, I know basic materials sometimes won't have real high strength ranked stocks in it. You'll get to kind of see that over time, and it's okay if you see that there's almost all the stocks under the hold section are under 90. That's fine. Just look at the top stocks in that group and see if the chart patterns look good, and you can still find good trading opportunities. So let's go back to industrial products. I wanted to show you that APWC, Asian Pacific Wire, and you can see the same kind of chart pattern I've been looking at. Big drop, but it looks like you're getting this bowl-shaped move. You've broken out to higher highs right through here. What you're hoping for is this ends up giving you a higher low. So you definitely want to wait for this to go back to a buy signal before you get in, because it could keep drifting lower, and now we're not interested in it. But if it can go back to a buy signal, it should give you that higher low and that additional confirmation. And again, the upside potential, from about $4 up to $8, you're getting a potential double there if it rallies back up to the previous highs. And then lastly, business services. I went over these, I think, on Tuesday. I don't know if I went over this one. Futu Holdings I like. It's a 97 strength rank under the hold section. Again, you're seeing very similar patterns here. So you had low right there. You're kind of you kind of have a little bit of a breakout area right here. Hasn't broken out yet. Oh, it looks like it's going back to a buy signal today. But it looks like this is impulsive. This looks more sideways right here. So it looks like it should start to move back up again. You know, this one had this low right here was kind of an even low, kind of a double bottom. There's a lot of congestion right here. If it breaks out above here, it'd really be, especially out of this sideways formation, it'd really be confident this thing's going higher. All right, and then under the buy section of business services, we went over Marathon Digital, MARA, 99 strength rank. This is a Bitcoin type play here. It's recently gone to a buy signal, but it's still an area that I like. Now, I do have to be aware that this could be a bearish ABC pattern for a move down. I'm not ignoring that possibility, but it's already had such a big drop. I'm assuming this is starting an uptrend, and there's your higher high, had a higher low right here. You've got a move up right here, and it's moving sideways right here, so it's much more like this will move higher. It could have a little bit of a dip down where it gets the buyers coming in. And then another Bitcoin related company is this Riot blockchain right here. Ticker symbol is RIOT, 99 strength rank, very similar pattern. It has a buy signal right now. All right. All right, let's get into the trading part of today. We're going to continue with kind of the candlestick patterns. And like I said before, as you get to this part in the candlestick formations, there's the basic ones you learn about. And these are just additional ones that you can, in their combination patterns. A lot of these are going to point to reversals, or sometimes they can be continuation formations. And again, I don't care if you remember the name of the formation, but it's really important you understand the formation itself when you see it. That I'm telling you, it'll help you make great decisions for entry decisions, really high probability trades, at least in the short term. And they could be decisions to get out of trades when you see these formations. If you've been in, because what we're going to go over today it's a reversal formation. So if I'm in a stock and it's gone up, and I'm really excited about the money I'm making, what could be a candlestick formation that might warn me it's about to drop? Could that be helpful to me? If I see that formation, I can get out, keep most of my profits I made on that run up, and avoid that drop. There's a high probability of that drop. That's valuable. That can allow me to get out of trades and take profits and know when I need to get out. Now, remember, these candlestick formations are very short term, meaning they're really only signaling what could happen the next day or maybe a couple days later. They're not long term predictors. But when you combine them with other chart patterns, like I said, and trend behavior, they become very valuable. The ones we're going to talk about today, the bearish pattern is what's called dark cloud cover. Again, you don't have to remember the name, but remember the formation. And the bullish version of this is called the piercing line. Now let's take a look at, let's start with the dark cloud cover. Let's look at Live Nation here. Now, the context is important. A lot of these, when you're talking about trend reversals, you're wanting to see a run up into the reversal signal, or in a bullish case, you want to see a drop before you get the bullish signal. Sorry, the allergies just, for some reason, they really get into my voice, congestion, and so it's hard to speak sometimes. So whatever's in the air this time of year is always, I'm allergic to it. It's the worst. But all right, so dark cloud cover. The key to this is that you want to see a run up. The first day needs to be a bullish candle, an up day, preferably a pretty good sized one. If it's a real compact day, remember that, and especially if it's a compact day with tails or shadows or wicks, whatever you want to call them, that indicates indecision. Okay, so you have to remember that that's indecision. You want confidence, and confidence is when you have a nice solid body of the candle. So you want to see a nice solid body of the candle up after the stock has been moving up. What's key to this is the next day, the stock needs to open above all of the price action of the day before. You can have a tail on this day like this on an up day, but the next day needs to open above the high. It has to be the highest point up here where it opens. And then what's also key to this, and this is kind of non-negotiable for this pattern, this particular pattern, is it needs to trade at least halfway into the candle of the previous day, halfway or more. Now sometimes it'll be really close, and it's like it looks about halfway. There are going to be some gray areas there, but if it's just barely, if it closed right here, that's not even close to halfway into that next day. Now I'm not saying that's still not a bearish price action, but it's not a dark cloud cover, and it's a much less probability that the stock's going to drop off of that. Okay, because the psychology of what's going on here is you have this upward move, the confidence in the buyers. You have a real confident up day right here, and then you have a real confident open where it opens at a new high, and then it comes all the way back down and it trades deep into that previous day. Well, what happens to all these people that bought in right here at the end of this day right here? Well, they're starting to panic, right? Now their gains, they've given back their gains that they've had. They've seen them have gains turn into losses. They start to panic and get out. And very often what happens is that triggers the start of the selling. You also have people that bought in right down here that they see the gains, and now they're seeing their gains drop, and they're starting to get concerned. They might start selling just to preserve what they've already made, especially if they've had a good run up. They're like, oh, that's good enough. Let's go ahead and get out. They start selling as well. And that's why this can lead to a reversal. Now, you had a little bit of a fight to try to go higher, but you never went any higher than that point, and then you drop down. So that was just a pretty strong bearish reversal. Now, the only variation that is allowed is you could have it trade down into the middle of that previous day and rally a little bit off of it. So maybe it ends up closing up here, but it had the intraday low down in that middle part of the day. That's still okay, but it's, again, I've found over the years it's not as strong a reversal. You want to see it close at least halfway into the next day. And that's called the dark cloud cover. The opposite of that is called the piercing line. And let's look at Valet right here. So this one, you want to have a drop. You want to have a pretty decent down day. And then you want to have it open below the lows. And this is barely open below the lows, but it did open below the intraday lows of the day before. And then you want it to trade at least halfway into, and these are duplicate days right here. You can get rid of that by refreshing the browser. I just don't have time to refresh it, so that'll get rid of it. But there weren't two exactly same days right here, just so you know. But it did open lower right there, closed more than halfway. And again, if the more the better. If it closes further into the day, that's even stronger. Now, it could even close above the high of the day, but that would make it now an engulfing pattern, right? But we already talked about bullish and bearish engulfing patterns. Those are strong reversal signals as well. But that's what I'm saying. It's not so critical that you know the names of each of these. The fact that it opened lower down here and is closing in the more than in the middle or higher in the day before is showing that's a strong reversal. And there's a very high probability that you're reversing move, and you have this big move up off of that. And you see it all the time. You'll see these big moves all the time. Here's an example more of a bullish engulfing. But what's different about this, though, as far as it relates to a piercing line, is that I want to see the day before be a long. I'd rather have it be the day like that. This compact move is showing a little bit more indecision. Now, the fact that we opened lower, we had an engulfing day right here, opened lower, closed higher, engulfed the day before. That's still a bullish reversal. Okay, that's a bullish reversal price action. But that's why we're learning all these things. So you know that's still something I would trade. Had a nice move up off of that. But that's why it's not so important you get the name right, but that you understand the price action, and that you know there's different variations of all these different of the price action, but they can all be signaling the same thing, that thing should reverse. And by the way, usually you don't necessarily have to wait for confirmation on this. And usually the way I'll trade it, let's say I was getting in, and I do this a lot. I use this a lot with short-term option trades. You learn how to trade options. You don't need a very big move in the stock to cause a big percentage move in the option. So yes, options have expiration dates, but remember these candlestick formations are very short term. I don't need to be in the trade. I might only be in the trade overnight. But a lot of times what I'll do is if I entered the trade on that end of that day, seeing that it traded more than halfway, the point where I know I was wrong is if it dropped back below that low of the day. Right there, because it shouldn't get back below the day. Now, remember on what we saw in Apple with the dark cloud cover, it tried to move back up again. Hold on just a second here. Or was it? Oh no, it was not Apple. It was Live Nation. We looked at. Hold on. There is one on Apple here. I'll show you here in just a second. But I was like, this doesn't look like the one we were going over. It's because I was looking at Live Nation. Right here, it fought to try to rally up and then dropped. So again, you could have bought a put option right there or shorted the stock, and then it shouldn't get back above this high. Here it retraced it a little bit over a couple of days and then had the bigger drop right there. That can happen off of this formation a little bit. Now, here's a good example here. Why isn't this dark cloud cover right here? Had a big, nice, strong move up, opened higher, Needs to get at least halfway into the next day. Now, again, that was still a bearish reversal candle. We got a drop off of that. Gapped up higher, closed lower than where it opened. But it would have been a little bit stronger bearish signal. I mean, look what happened the next day. The next day, it rallied all the way up to the top of that day. It almost reversed it. And I think part of that is that you didn't get deep enough in here to really get the panic going on the selling. All right, let's look at a few more examples. Let's just look at dark cloud cover examples first, and then we'll look at piercing line examples. Let's go to Apple. There's a couple here on Apple, and back in March, right here, you can see we didn't have a big run up here though. We had a little bit of a run up. You'd like to see a little bit of a bigger run up, but it did open higher. It had a nice big up day right there. Opened higher and then reversed it. It came more than halfway into there, and then you had this drop lower off of that. By the way, going back to Live Nation again, LYV. What if I got in down here? By the way, there's a bullish engulfing formation right here. It had the drop, bullish engulfing. What if I got in on this bullish engulfing formation? The stock was running up, and then I get the dark cloud cover right here. That could be my exit decision. And you know what would make it even a real strong exit decision is not only are you getting the dark cloud cover, but you're getting it right at a previous high right here. So you got resistance from the previous high. You're getting a bearish reversal candle. But you don't notice these things until you work on, I've got to work on chart patterns to recognize where the resistance areas are. And the more you do this, eventually it jumps out at you. You say, okay, here's a resistance right here. Maybe you already have a trend line drawn in to point that out, that it could have a little bit of trouble there. It might sometimes, it doesn't always mean that stocks are going to go down when it gets to previous highs like that, but they could move sideways for a few weeks before breaking out. So why not? And now if I got a bearish reversal, it's a no-brainer. You get out. You can always get back in if it breaks out again. But do I want to hold the stock for 3 or 4 more weeks, let it move sideways, or could I get in 2 or 3 other trades before coming back to this one again, and trades that are stocks that are moving right now, and get my money working for 2 weeks or so, 3 weeks before this one maybe breaks out again? I don't know. But that combination, you're up in that resistance area and you get that dark, I mean, that's a no-brainer there. You get out. That'd be a signal to get out, or not buy in, not get into that trend. Let's look at Caterpillar. It's kind of a little hard to see this one. This is back in January here. A run up. Again, it opened, had a solid up candle right here. It opened above the intraday high of the day before there. It closed a little bit more than halfway into the next day. And you can see the drop that happened afterwards. Goldman Sachs. Just recently had one right here. Although again, that's probably a little bit compact. I'd be a little bit concerned that wasn't a big, I would have rather seen it reverse it on that day right there. This is already a little bit of an indecision day. And it's probably a little bit of a bearish engulfing, although it didn't quite engulf the intraday low right there. But the bottom line is that was a bearish price action right there. Obviously, it dropped off of that. Now, again, I don't want to create the illusion that every time you get that formation, it's always going to work. I mean, we're looking in the past where it's we can see the results of what happened afterwards, but it is a very high probability. These are very high probability reversals. So the majority of the time they're going to work, and that's why you get a lot, and that's why you don't see them all the time too. We'll have to go back several months on some of these. Now, where are you more likely to see them? Well, if the market's been rallying a lot, then you're likely at some point to see a dark cloud. You'd be looking for dark cloud cover somewhere on the charts. Now, when the market is in a nice strong uptrend, you're going to have some of these individual stocks that are also moving up, right? And when the trend is starting to get done, what will happen is some of these stocks start to roll over before the market does. They'll start to move over, roll over. So when the market starts to get a little overextended to the upside, you'll start to see individual stocks that'll start forming these either bearish engulfing or a dark cloud cover. You'll start seeing them, and you can, like I said, you're either making that decision to get out of the trade because you've already made the money riding it up, or you could even get into early shorting opportunities where you're able to trade the reversal back down. Now, people always say, again, this kind of goes contrary to, the website's focused on trend following, right? And I don't want to imply that we're going to go in and be, we're going to be trend reversal traders. That's all we're going to do. But hopefully you can see how recognizing trend reversals are an important part of trend following as well. How do I know when a good time to get out of the uptrend is? If you get a dark cloud cover, there's a good chance it's reversing. But I also believe that I'm basically a trend follower, but if you see these situations, particularly with short-term option trades, and these are short-term signals, why not trade them? There's a high probability you're going to get a drop off of these moves. I'm not going to make money on every trade, but why? And they don't happen very often. Why not take advantage of that situation, buy some puts, and make a little bit of money on a quick drop, or short the stock and make a little money on the quick drop? For the piercing line, the reason why there's not a lot of near-term charts or piercing line examples is because the majority of stocks have been moving up. But if you get a stock that's been dropping, that's when you'll be more likely to recognize that piercing line. Let's do a few more. Let's look at UBO. You're at a little bit of run up right here. Opened above it, closed well into that candle, and you got a drop off of that. Now, again, usually like a little bit of a bigger run up, but again, sometimes, and this could be the trend at this point is down. You're getting that rally within the downtrend. You're still kind of trading the trend. I'd be shorting. You've got lower highs, lower lows here. I could be shorting. This looks like the correction within the trend, and I get that dark cloud cover. I could be trading that next expected move down. Here's a stock that I talked about today is wanting to get into, but back in Jumia, back in March, same thing, had this run up. Again, it barely closed or opened above the high of the previous day there. It traded more than halfway. Not quite an engulfing formation, but that's all we needed right there. It traded more than halfway. Again, this is not uncommon the next day to see it try to fight to come back, but it reversed. It came down down lower. And the fight to come back should not go above the high of that day. If it does, they were successful. They fought it back. But it shouldn't. And again, that's what fuels the selling too, because you have we're reversing, and then here it opened lower, it tried to move back up. It's like, oh, we're coming back, and then we can't quite come back all the way, and then bam, that's where the panic kicked in right there. All right, let's look at piercing line. Some examples of piercing line here. Let's look at CVX back in April. You had this kind of drop down through here. It opened below the low of that previous day, closed well above the halfway point. Again, it dropped the next day. That's not uncommon. The sellers tried to push things back down. They failed. This thing reversed. Now, this wasn't quite dark cloud cover right here. Why? Again, it's still a bearish reversal, but it didn't get halfway into that next day. It did drop a little bit off of that, but it rebounded right back up a little bit. But that was still a bearish. But again, we're talking about different degrees here. It's still a bearish reversal, but not as strong a bearish reversal. So if I saw something like that and I was in a trade already, I'd still probably sell off of a day like that, because it's still a bearish reversal price action. But I don't know that I would short it without having that deeper move there, that higher probability that it's going to drop. Let's see, on Fubo. Now this is probably a little bit more of a bullish engulfing. It opened lower, had been dropping, opened lower. So that's probably, I'd call that a bullish engulfing pattern actually. But I mean, again, it's still a reversal. Jumia has been dropping. Opened, they had a down day right here, opened lower, traded more than halfway up. Again, tried to pull back again the next day, but then it rallied up from there. Verizon back here in March. This drop. Decent down day right here. Opened lower, closed more than halfway. Again, that could be maybe a little bit of a bullish engulfing, although usually I like to see the engulfing pattern engulf the intraday highs and intraday lows. But when I was teaching engulfing patterns, remember I said, you're not always going to get it have it engulf everything, but it doesn't diminish the reversal, because there's that gray line between an engulfing pattern and a piercing line, or a dark cloud cover. Doesn't really matter, Doesn't matter if you get if the name's correct. No, the matter is recognize the price action, because both of them are signaling a reversal. And then notice again, the next day it tried to fight to come back down again, but it couldn't. It didn't go. It came very close, but didn't go below the open of the day before. Started to rally off of that. Honeywell. And these are not, all I was doing to find these examples is just looking at, I started going through the Dow list, and then I went into other watch lists I have. And all I'm looking for is the examples. These are not, I'm not trying to say, or there's nothing, I'm not saying to go get into any of these stocks, especially since I'm not looking at right now. I'm looking at it back before. But the point is, once you understand the concept, if you want to practice it, just go pull up any stocks, any list of stocks you have, and look back and look. What you're looking for is where I start to look for dark cloud cover is, when did the rallies reverse? Where there was, and obviously this doesn't have dark cloud cover, but whenever you see a reversal, look to see if you see an example of dark cloud cover, or if you see a drop and it goes back up again, do you see the piercing line? And then once you can see several examples, you can kind of train your mind to be able to recognize it pretty quickly. So on Honeywell here, this was back in May. This drop right here opened lower, closed right in the middle of that previous day. Now you had a little bit of a move up and it came back down again. So this is an example of one that didn't really reverse into an uptrend. It came back down and actually traded below that low. But, and this is why, again, I use this stuff for short-term trades a lot of times. It did move up the next day, and that was a pretty decent move up on an option trade. I would have made good money on that. If I held it even another day, that wasn't quite dark cloud cover because it didn't open above the high of the previous day, but that was a bearish reversal day. I'd make sure I was out of my option trade if I saw something like that. Maybe I didn't make a ton of money, but there's a high probability of making something. All right, let's go ahead and end it there. Hopefully that helps. And again, I know it seems like a lot of these are almost the same. They're kind of signaling the same thing, but there are different variations, and I'm trying to just teach you some of those different variations so you can get good at them. And again, I don't care if you remember the name, but remember the price action. That'll help you. All right, thanks everyone. Have a great week. We'll see you Tuesday for the next market update. Bye now.